How's it going, everybody? It's Stas here. So I wanted to make an off-the-cuff type of video today. I have a couple points I want to cover, and as you guys saw in the title, this is a huge mistake you guys are making, and maybe it's a bit clickbait, maybe not, I don't know. Hit the dislike button if you want. It doesn't really matter, but I want to go over psychology here in the stock market and what it really means to be a contrarian in the stock market and how you can navigate in a world of hype, in a world of sensation, euphoria, and I'm not necessarily talking about the world in general. I mean the world of the stock market, right? So sit back, relax, take a sip of your coffee, and let's talk, guys. And while we're talking, we're going to be watching AMC live action right now, which, by the way, we got news they issued about 11 million shares this morning, and the stock went from $77 down to about $38, which is nuts. I mean, it cut in half from pre-market, so the low point of the day today from 77 to 38. Now we're back up to 57. The trend looks like it's reversing. So let's start talking about what I have on my head right now, and it has to do with psychology, right? And when you're looking at the stock market, it seems like everybody is chasing the hype stocks. Everybody is chasing the hottest tech stock, the next big thing out there, and nobody's really paying attention to stocks that aren't so glamorous. Maybe they aren't that sexy, or, maybe they're not the most exciting. And I'm not going to necessarily talk about those stocks today, but, maybe commodity stocks, maybe consumer staples, maybe, I don't know. There's so many companies out there that you have never even heard of, and you would think, oh, this company sucks, this stock sucks, but in reality, it could give you a great return over time. And overall, what we're noticing in the markets, and I don't want to say the world in general, but in the world of the stock market, right? What we notice is people tend to think in packs, right? They tend to move as a group, and if you're not with a certain movement, if you don't like a certain stock, you're viewed as an outsider, you're viewed as a hater, you're viewed as somebody that doesn't know what they're talking about, right? And this could go with the hype tech stocks. This would go for those, the Teslas of the world, the Shopifys, the Amazons, the Apples, which are great companies, don't get me wrong, but if there's people out there saying, oh, the valuations are too high, oh, maybe these aren't the best prices, they get hated on, right? They get spat in the face. Well, not really, guys, but metaphorically speaking here, they just get hated on a lot if you go against the grain. And the truth is, when you're in the stock market, it's good to have companies that are the Amazons of the world, the Apples, the Teslas, but you have to understand it's not all about owning those names. You have to understand what price you're paying to own those names. I've mentioned this so many times, and this doesn't go only for the big tech names. This goes for any stock out there pretty much. You have to understand price is what you pay and value is what you get, right? If you're paying $30,000 a share for Amazon, it might not be the best investment right now, but that doesn't mean the company's a piece of crap, because what people don't understand, and they tend to confuse this, right? They see Amazon, they're like, oh, that's a great company, I'm going to buy the stock. It doesn't necessarily work like that, because yes, Amazon's a great company, but the stock might be overvalued at this point in time. And this is another big thing about investing and trading and the stock market in general. You need to exercise patience, right? You grab a list of stocks. This is what I like to do, guys. I compile a big list of stocks. It's called a watch list, whether it's 10 stocks, 20, 30, 100 stocks, 200 stocks, whatever it may be. Compile your watch list of great companies and set a price at which you're willing to pay for these companies. And when the price goes down there, if it does, because not all of these companies are going to hit your target price, well, that is when you'll be able to knowingly buy in at a valuation that is attractive, right? So let's say, for example, let's throw Tesla in the mix. A lot of people, and this is the best example I could say about people thinking in packs. And I personally own Tesla, so I'm not a Tesla hater here by any stretch of the imagination, but a lot of people piled in a Tesla and they were all thinking it's going to $5,000 a share in the next year or two, right? People were piling in like crazy, regardless of the valuation. And you can clearly see it went from 350 to about 900, and ever since 900, which, mind you, that was about almost 6 months ago, the stock's been cooling off quite a bit. The hype's been dying down a bit, and it seems like it's slowly falling to a more attractive valuation. Now, a lot of people still think Tesla is overvalued at this point in time, and you may have a point. It depends on what models you're looking at. Look, if you're valuing the company on what they're producing in terms of revenue today, is it worth $600? No. I mean, it's overvalued if you're looking at what they're producing today. But if you look at 5-10 years down the road, is it overvalued now? I don't think it is, which is why I own it. I personally think it's a pretty decent value right now if you have a 5-10 year horizon. But you guys get the point, right? People tend to think in packs. They move together for the most part. And if you're an outsider, if you're a contrarian, you're looked at as a crazy person, as a psycho, right? Like back in 2007, 2008, people that were predicting the housing crisis, the market crash, they were looked at as morons, right? They were looked at as morons, like, come on, you're not buying a house right now, you're not in the stock market, come on, right? And then all of a sudden, boom, the market's collapse, and those people did quite well that were predicting that, and they were positioned for that, and they had cash to pick up assets at a very depressed level. That's what you guys need to do. That is what you guys need to understand. And I'm not necessarily saying stay away from big tech, stay away from these tech names right now. No, I'm not saying that. But you have to understand that if the crash comes, and by the way, guys, I mean, we did get a crash last year. That was a very quick month down move, upwards, V-shaped recovery. That was very quick. And I don't necessarily consider that a bear market. I mean, yes, technically it was a bear market. If we pull up SPY here, you can see it did go from 308 down to 218. That was a 40% drop. Yes, it was a bear market, but now we're a lot higher than we were pre-pandemic, and the economy hasn't recovered yet. And, these prices are still crushing it and still going up, even though the economy hasn't fully recovered yet. And I truly believe that, and I don't want to sound like a doomsdayer, but I truly believe we are going to see another big recession, whether it's in a year, 2-3 years, who knows when it's coming, but I'm not buying it that this blip, this drop, and the rebound is all we're getting, and now we're off to the moon again, right? I'm not buying it, to be honest. I think we are going to see a downturn that's not going to be a month long, right? This downturn was from March to April, and then boom, we snapped back and we recovered. But if you pull back to what happened in 2008, we went from 155 on SPY to $67, and was that a month long? Oh, no, it was not a month long, guys. That happened in August, September of 2007, right? And where did it bottom? It bottomed in 2009. So we're talking a year and a half downwards move. Are you guys prepared for that? I don't know. I think I am. I think I am personally, but are you prepared? That is the key question, because a lot of people, the truth is, they're not ready for this. They don't understand what could potentially happen, and that is why the contrarian point of view is so important. It's very important. It's arguably the most important thing. I don't want to go that far, but being able to think against what the mainstream media is telling you, against what the status quo is, that is a way that you can be compensated very nicely when we're talking about stocks, investments, and you could really protect yourself on the downside when the crash does end up coming if you think from a contrarian point of view, whether it's you're buying gold stocks, which no one does. You look like a weirdo if you're buying gold stocks, but if you're doing that, if you're hoarding a lot of cash right now like Mr. Buffett, a lot of people are like, oh, Mr. Buffett is Warren Buffett, he's out of touch, he doesn't get it, but the truth is, this man is 95 years old. God knows how old he is. I don't even know. 90, 95. He has lived through more cycles than any of us have. This man understands how this stuff works, and that is why he's sitting on 250, 300 billion, I don't even know, dollars worth of cash in the Berkshire Hathaway fund, or whatever you want to call it. They have so much cash because he understands this. When the market collapses, when prices come down, and remember, price is what you pay, value is what you get, he is going to be ready to pick up an Apple at $80 a share. Let's say hypothetically it goes to $80 a share, or maybe even under. He's ready to pick up Amazon. Now it's at $3,200. Let's say markets collapse. He's ready to pick up Amazon at half the value it is today, which would be unbelievable. Could you imagine buying Amazon at, let's say, $1,500 a share, $1,200 a share, $1,800 a share? Who knows where it goes? But that is what being patient does for you. It allows you to wait, and it allows you to be ready for the downturn that inevitably is coming. We don't know when it's coming, but we know it is coming. So, in my opinion, this is huge. A lot of people are not ready for this. This is a mistake a lot of investors are making right now. They're just all in the markets. They're pushing heavy into these growth stocks. They're not understanding of where the markets could turn and how ugly and how fast things could get. And I don't want to sound like a doomsdayer. I'm not a doomsdayer. You guys know that. I'm just here being realistic. I'm not idealistic. I'm being realistic, right? There's a big difference there. And I just want you all to be aware of this and be ready for what could happen by storing cash, buying gold, metals, buying, I don't even know, stocks that are close to their fair value, under fair value, maybe stocks that people don't talk about all the time, not all these massive hype stocks, and AMC is a perfect example. I'm not putting AMC on the spot. This is not an AMC video. And by the way, let's see what it's doing right now. Okay, now it's at $60, but this is such an example of people moving in packs, right? Everybody and their grandma's buying AMC right now, and the contrarian thing to do, which I'm not doing because this is very dangerous, it would be to maybe buy puts on AMC, or maybe short it if you're ballsy enough, which again, I'm not doing that. That would be a contrarian thing to do. And I don't know, I haven't looked at the puts. I'm sure they're pretty cheap right now, but if you bought puts 2 years out, 3 years out, give yourself some time. I don't know, maybe there's money to be made there. Maybe I'm wrong. I don't know. But overall, that's pretty much it, guys. That was kind of an off-the-cuff video, literally. If you look at my iPad here, I have like 2-3 points written down, and we just went over everything that I had to say. So be ready, be prepared, and understand that things could happen that you didn't even think could happen. And I know this because it's happened to me. I didn't think the markets were going to collapse 40% and snap right back. Who the heck thought that was going to happen? Well, it happened. We lived through it, and we learned from it, and now we're pushing forward, guys. So what do you think? Let me know down below in the comments. I hope you all enjoyed this video. If you would disagree with me, let me know. If you agree with me, let me know as well. Make sure to hit the like button if you all found value. Subscribe to the channel if you do want to see further content like this. And make sure to check out my Patreon. I give all my buys, all my sells, call outs, whether it's options, trading, short-term stuff, long-term investments, all of that is on Patreon. Patreon. I'm also doing a morning update video there, and you guys get more access to me one-on-one throughout the day. Check it out, link down below, or you guys can go to stocksurfest.com/Patreon. Don't forget to also get 2 free stocks from Webull. Those are valued up to $1,600. All you have to do is deposit $100 and you get 2 free stocks. Same with M1 Finance, deposit $100 and you get $30 from them. Those are linked down below. I'll catch you all later on. Thanks again for tuning in. As always, stay safe out there. Keep crushing the markets, guys. Peace out.